Good evening. This is Doc Severson for the Theo Night Report for Tuesday, October 17th. Well, the big news today was the Dow finally hit the 23,000 level, just barely hit that. And it took about 27 trading days to go from 22,000 to 23,000. Does that really matter? No, not really, but it does appear that the pace is accelerating, which is kind of what we would expect to see near the end of an intermediate rally like this. So markets always go through the same kind of look and feel where they go strong off the bottom, very, very strong off the bottom, and this is mostly due to short covering. Then they move into more of a sideways or choppy area near the middle of this as they try to recover from that initial move and build up energy again. And then from this final energy push, we get the final kind of a parabolic top to this. So this one is almost perfectly tracing out what we would expect to see from here. Now, I wouldn't be surprised, actually, I know nobody's talking about this right now, but I wouldn't be surprised to see the move from 23,000 to 24,000 actually come even faster than 27 days. This is typically what you see at the very end of a type of rally like this. Now, when I say end of rally, what do I mean by that? Do I mean that we're just going to drop like a stone at that point and drop, 20,000 points and we're going to be living in the dark ages again? I don't think so. I think what we're going to be seeing is from that point, whatever kicks off the market into the next consolidation period will be relatively, I don't even think it's going to be this deep. I think it's going to be something where we have, maybe 1,000 points or so where we consolidate, where we set up a larger range and just set up perhaps what might be the next leg up of this market. Now, I know everybody's running around pointing fingers and saying this has got to fall, this has got to fall. But the problem is that that's not going to happen until this liquidity issue goes away, rates start to rise, and that there's diverse instruments out there for people to invest in. Right now, there is only one answer. And as long as the answer is equities like this, then we are going to continue to see movements like this that has everybody scratching their head and wondering why. It's actually quite simple, but we don't want to look at this and accept it for what it is. Now, actually looking at the Dow today, the Dow wasn't really didn't really perform all that well. We just had a couple of outstanding ones here. We had Johnson & Johnson and United Health, both of whom reported earnings this morning and spent most of the day rallying to the tune of about 4% for Johnson & Johnson and as much as almost 6% for United Health. So most of the day, out of 30 stocks, we only had about 11 or 12 advancers. And so overall, you'd look at the internals and say, well, we're probably losing the war today, but that wasn't the case with the Dow, as it always seems to be that we have one or two stocks. Again, like I talked about last week, we're getting this constant rotation from one to another. It's just a big shell game. Now, we did have a couple of the financials reporting today. So this is Morgan Stanley reported today, came out good, but basically closed that gap by the end of the day. So that wasn't good for Morgan Stanley. And then Goldman Sachs spent most of the day selling down from here. So the financials right now, until we start to see rates rising, are just going to have no room to grow into to increase their margin. So speaking of the shell game, if we look at the S&P right now is in exhaustion on the daily chart and almost there on the weekly chart. Unlikely to see money rotate into that. As we look into the Russell has been in exhaustion on the daily chart from this extraordinary 10% rally that came up out of nowhere and is trying to do what it can right now to work that off in this very tight little coil. But the problem is on the larger time frame, that the weekly chart is also in exhaustion. So it's unlikely that we're going to see continued rally here. If we do see a move that tries to break out from here, which is what a normal move from this type of flag would do, I believe this might be hauled back down to the range again until we get a chance for the weekly chart to also recharge. So I would anticipate that the Russell is got a number of weeks left in a larger range here until this is going to be ready to receive funds again. So I believe the most likely suspect for any kind of rotation for one final push up, maybe, it seems like every push up is perhaps the final push up until we start to build that bigger range, might be the Nasdaq. Because what's happened here is if we look across the stocks, what Don calls the monsters of tech, Facebook, Apple, Microsoft, Google, Amazon. If we look across those are actually in the best shape. They've done the most consolidation over the last several weeks and actually have a tremendous amount of weekly energy left here, which might support a little bit more of a trend. Now, we've gotten a little ahead of ourselves here. We've had a very strong daily move, which has brought this down to exhaustion as well too. But this can easily be cleared with just a little bit of coil here. Range expansion leads to range contraction, and then the process can repeat. So if we're going to look as far as where money might rotate into next, I would have to say tech, and especially the monsters of tech, may be ready for the next move. And it's just in time too, because as we start to look for earnings here, we have next week is Google, and we also have, I believe, Facebook as well too. So Facebook and Google are going to be driving earnings starting next week. Now, this one is not listed here, but I know that we had the last earnings here on 7/21, so we should have Facebook coming up fairly soon. Looking for Amazon. Let's see if Amazon is on the horizon. That one is coming up as well on 10/26. So starting next week, or right around there, we're going to start to see these big tech companies, and a lot of expectations and hope are already built into them. Will they perform, or will a disappointment lead us into that next consolidation, that big consolidation zone we've all been looking for? That's it for today's report. Thanks for listening. We'll see you tomorrow.